are just joining in to our special Muhurat Trading show. I'm Abha Bakaya, and with me, Sakshi Batra. On this auspicious day of Diwali Muhurat Trading, we'll have with us some of the biggest names from stock markets and mutual funds, which decide where money is invested.
Absolutely. This is the Muhurat Trading session that begins in just 1 minute, viewers. This will last for 1 hour now, and we will get to see as both traders and investors really give a lot of importance to this session, they seek blessings from Goddess Lakshmi for prosperity as well as profitable trades ahead. On your screens, 25,901. That's what is being indicated as the opening levels, as we could see for the markets. Remember, Nifty Bank has been an outperformer for the last few sessions. It's already, seen a record high level. It's climbed above 58,000 odd mark. We might see an uptick continuing from that level as well. The IT stocks that have been in focus all through last week because of the earnings focus are likely to continue their momentum. And there you see on your screens, the markets have started to move. Let's look at the Nifty first. 0.3% higher in trade at 25,925. What a beginning to Muhurat Trading, Abha. And we could close in on that 26,000 mark for the first time in this year after a long time of consolidation.
That would be exciting, wouldn't it? 7 years in the green for Muhurat Trading. And will this be the 8th year? Sudeep, on opening ticks, it clearly looks like the market is in a very, very festive mood.
Absolutely. In fact, Sudeep, I'd like to come to you now and try and understand. So we're starting off on a high note at a 52-week high level for the first time, closing in on that 26,000 mark. This brings us closer to nearly about 300 points from the erstwhile record high that we've seen on the Nifty. Do you see higher highs in the new Samvat for the markets? What's your target price for the Nifty this year?
Well, we can talk about target price surely, but definitely I do see higher highs during the new Samvat. Look, I think the domestic factors, as all of you have been outlining, are pretty good. The government has been doing what is necessary to be done, necessarily required. The central bank is helping. The rains have been plentiful. The inflation has really come under control, much below the RBI's target inflation rate. So things are looking good as far as domestic scenario is concerned. As far as the global macro and global scenario is concerned, I think we still have that niggling problem of 50% tariff levied by US on Indian exports, part of the Indian exports. But I think even there are rays of hope that some kind of solution, some kind of resolution may be in the offing, and that is enthusing investors as well. Look, we know domestic investors have been investing in Indian markets heavily, and they have been carrying the market forward during the last Samvat. But I think the hope that the FIIs will, instead of selling, will start buying in a big way, can take the market to a completely different level in the new Samvat. And I think that's what we are definitely wait for. A lot of new IPOs are coming, which are good quality companies coming to the market. And I think these increases the depth of the market, which is required for Indian markets to ensure that the valuations remain realistic. Instead of too much money chasing too few stocks, more and more good quality companies getting listed in Indian market is good for Indian markets' health. I think that's also happening. So I think things are falling in place. We will definitely see newer highs in the new Samvat, and we will look forward to prosperity for all the participants.
Neeta, we're talking about value and talking about, markets only moving higher from here. How are you looking at the ideal portfolio mix for the new year? Any key changes you're making, or what do you feel is a prudent mix at this point of time?
I mean, as I said, one should be focused more on the domestic story rather than the export-oriented story. Although, there could always be a positive surprise with President Donald Trump, and suddenly you hear that there's a trade deal that's been agreed upon, and that'll be really positive for the exporters who are very depressed. So I think one could take some risk on that trade and keep one of those trades as well, but a very small portion, because that could ultimately become a big trade if it works out. And then the rest of the portfolio, of course, you have to be stock specific, domestic consumption story. I said sectors that look attractive include financials, commodities, healthcare. So there are a lot of sectors that have got growth, but you have to be stock specific. realty, for instance, as well, because interest rates have come down.
Sure. Sudeep, do you want to add on to any sectors that Puneet has just mentioned that you believe might outperform in the new Samvat, and maybe also give us some stock ideas that you are asking your clients to invest in for the new year?
Well, as far as concept is concerned, I completely agree. If you are a risk-averse investor, stick to domestic focus sectors, and then you are being safe. We have been recommending buying into cement, infrastructure, construction related companies, and I think that's one sector which definitely will do well with the kind of government capex which has been announced, with the expectation of private capex. I think cement definitely has been our favorite for quite some time. Ultratech Cement, being the leader in this pack, has been our favorite, and I think we still recommend investors buy into that. As far as infrastructure, construction, capital goods, again, these are domestic focused predominantly. And the leader of the pack, Larsen & Toubro, has been our favorite. They have significant orders coming in from West Asia as well, which is improving their margin profile. And again, this can be looked at. We also like some of the consumption-related themes which are based on India's story, particularly on the telecom side. We do like Bharti Airtel. Look, they're doing all the right things, ticking the right boxes. International operations are doing good. And there is another rate hike in the offing, which will improve margins significantly, increase ARPU significantly. And the Vodafone Idea matter, which is in the Supreme Court regarding AGR dues. If there is a favorable decision there, I think that will also benefit Bharti Airtel directly. So Bharti Airtel at current level does look good from all points of view, and again, investors can look at that.
Okay, so that's one stock pick coming in from Sudeep, and haven't heard telecom in a while, so that's one for the reasons that he mentioned to keep on your radar as one that a dark horse might shoot out. Puneeta, let's talk about gold and silver. You mentioned commodities, and we got to talk about all the glitter and all the action that's been happening there. Everyone is just stumped by the kind of all-time highs we've been seeing on precious metals, and we've obviously been seeing whether it's gold financiers or whether it's metal names, commodity names running up on the back of all-time highs in copper, platinum, silver. Everything is moving. What are you making of this trend?
As they say, in a different way, all that glitters is not gold. It's also silver, copper, everything else now as well. And so I think it's a broad-based commodity rally, and we are also seeing Bitcoins rally. We're also seeing Bitcoin miners rally globally. And it's all because there is a risk to what is the future state of the US dollar. So there is a lot of concern about, is dollar going to remain the reserve currency and what will replace it? So that's part of the reason why I think some of these commodities are rallying. And also then the underlying demand for commodities like silver in the EV and industrial segments is also driving that growth. So I think commodities is an alternative to the dollar as a reserve currency trade. I mean, that's the trade that's kind of been playing out. And then it's also the general risk aversion that Indians have had a little bit to the equity markets in the last 12 months. So people have been looking for other places to invest. And so gold and silver, but I really don't know what to make of how much more steam there is in this rally. I'm not a commodity technical analyst, but that's really something that is not necessarily only fundamental, but technically driven. And so technical models would be better at predicting where these gold and silver go. From what I'm hearing, that while there could be consolidation in the short term, there could be another leg up at some point next year.
All right, Puneeta, we'll thank you then for being with us on this very special, and we wish you from the entire team of Business Today and India Today that you, your entire team and your loved ones have a very happy and prosperous new year ahead. We'll of course catch you up soon and
thank you
into
so
the
much.
new year to see
and happy
insights.
Diwali to all the viewers.
Happy Diwali.
Thank you so much. All right, Sudeep, what's your call? I mean, gold, silver versus equities, what will outperform, or what do you think gold and silver can continue to outperform the equities in the new Samvat too?
Well, I don't think so. I think last year what we did see as far as gold and silver is concerned is I think once in a lifetime kind of a scenario where gold and silver really, really outperformed every other asset class. Considering the level at which gold and silver is currently trading, I don't think the new Samvat which started today will see outperformance by gold and silver. So, if you want to take a bet, I would say you should take a bet on equities. As far as Indian equities are concerned, definitely the current Samvat will be the one of Indian equities as opposed to gold and silver. I'm not saying you move out of gold and silver, but the kind of outsized returns which you saw last year will not be visible this year. That is pretty much, I can say with some kind of confidence. It is time for gold and silver both to consolidate. I don't think it is going to crash or come down significantly, but some amount of consolidation is par for the course, and that's pretty much what will happen in the current Samvat. Focus on equities, focus on pockets, focus on identify stocks and buy into them. You will do well if you are into equities predominantly.
All right. That's the latest coming in on the commodities front, but lots more to talk about. All the IPO action. Let's take a look, Sudeep, at what's been happening there. Now, in this past year, we've had something like a Black Buck see 153% return. Something like an Arthur Energy see about 125% return coming in. And that's just the beginning of it. The list goes on. But the biggest IPOs are actually towards the end of this year, whether it was Tata Cap, whether it's the upcoming ones. Exactly. LG creating history. So it seems like the market's appetite for the primary market is not going anywhere at all. Is there enough value as you see it, or is this again a more risky investment option for investors? Because at least from the historic trends or what we're seeing so far this year, the returns are 100% plus.
Well, Abha, it's always a mixed bag. There are issues which are giving fantastic returns, and there are issues which are trading significantly below their issue prices. And I'm sure you can make a list of that as well, as it's been now shown in the screen. So my advice to investors always have been and will be that be careful as to what you're applying for, what you are getting into. There are a lot of good companies which came with IPOs last year, and there are a lot of good companies which are planning to come with IPO in the forthcoming few months. Now, the question is, whether the company is good, the business is good, and more importantly, at what valuation, what price the IPO is coming. Look at the case. I don't want to undermine, but look at the case of Tata Capital IPO as well as LG Electronics IPO. Now, both are good companies coming from top corporates. Globally well known, very respected and reputed. Now, Tata Capital IPO didn't get the kind of response one would have assumed from that kind of a pedigreed entity, because the valuation was not cheap, and it didn't attract the kind of a subscription from the retail as one would have expected, and it didn't naturally get quoted at a significant premium, and it's been around that price at which it came. Whereas look at LG, there was a significant discount to the listed peers, whether you look at Voltas, Blue Star, Havells, and everybody else. And LG, of course, is the giant, is a leader, is a global company, presence across segments, fantastic profitability, fantastic business, and at a significant discount to the valuation at which the peers were quoting. So obviously, there was a massive oversubscription, and the listing happened at 50% above the issue price. I mean, and look at the excitement it created. So I think you look at the company and also look at the valuation when you are getting into an IPO, and that's the way to go about it. If the company is not good, the business is not good, don't touch. If the valuation is not right, be careful.
Okay, well, on that note, thank you so much, Sudeep, for being with us. And of course, Diwali wishes yet again to you, to your loved ones as well, from our entire team. Of course, we will see you more often in the new Samvat.
Happy New Year to all of you too. Thank you.
Thank you so much. Viewers, we are now going to be joined by two other market masters as well. Deven Choksey, MD of DRChoksey Finserv Private Limited, is now joining in. And we also have with us Amisha, Vora Chairperson and MD of PL Capital, Prabhudas Leeladhar. Warm welcome to both of you and thank you so much for taking the time out. Warmest wishes for the Muhurat Trading as well as the upcoming Samvat as well. Let me start off by asking you, Amisha, what are you penciling in on as far as the new Samvat is concerned? Do you believe we will be able to cover up a lot of lost ground of the current Samvat that's just gone by? And of course, what's your expectation on equity returns?
Happy Diwali and
Happy
very
Diwali.
happy Muhurat Trading to you both and all the viewers. Yes, I am firmly in the camp that believes that Diwali to Diwali and beyond, Indian markets will get back their luster. Last year we have, as markets, also given very nominal positive upside Diwali to Diwali. At the same time, when you compare with some of the global markets, we have been one of the underperforming markets. When you compare to all the precious metals, which is a very easy trade comparatively, we have substantially underperformed. But I think that underperformance, coupled with the fact, and also because of the fact that a lot of FI selling has happened, creates a very good ground. And when you combine that with interest rate cut, income tax cut, and GST cut, we have created a very solid ground for both a earnings recovery and a market recovery.
Okay, great. We are starting to see signs of that earnings recovery so far as well. Deven, a very warm welcome. You know, we've been discussing market trends in the Samvat for as long as I can remember. If you look at the trend this year, you know, do you feel we're at some kind of an inflection point? How are the, different factors at play this time around, different perhaps to what you've seen historically?
Hi, happy Diwali to all of you. Well, I think never in my lifetime I have seen this kind of a situation wherein you have got significantly large amount of money available in the hands of consumer as well as investor. Investor is pouring in money through the SIPs in the mutual fund as well as direct equity. Look at, I think, the kind of IPO subscription that we have been fetching. The retail investors have generally been average subscribing 35 times more, I think, in every IPOs. I think that's the kind of power of money which I have never experienced, I think, in my lifetime so far. Consumer definitely is spending huge, and I think nobody would expect it in 2025. Against all tariff tantrums, India would probably bring down the income tax rate, and they will also bring down the GST rate. They will bring down the inflation in successful manner, and at the same time, interest rates have also come down. I believe that I think this kind of combination is rare. I think one has not seen this kind of combination. And the power of this combination going forward should be in the direction of, I think, higher amount of growth in the earnings for the corporates. I would not be very surprised, I think, if we continue to clock larger than average growth in next 2 to 3 years, at least in the near future, or even on a higher base. So certainly, I think we are heading for a good time. Maybe I think the market has probably started realizing, and that is where I think the laggards have started moving up as well. I think one should see a different Diwali next year compared to what one has seen, the muted one, which in the current year, from last year to current year. So let's hope for the best. I think this full year is beginning now.
Absolutely. Let's hope for the best. Let's also welcome Sunil Shah, Fund Manager, SRE PMS, also joining in on the program with us. Diwali wishes to you, Sunil. Your sense of the top 2 or 3 themes that you believe will outperform in the new Samvat year?
Yeah, thank you so much for the invite. Happy Diwali to all of you and look forward to a great year. So clearly, I think consumption, and as was spoken earlier by other speakers as well, consumption is the theme to watch out for. The kind of money power which is there in the hands of people, given all those interest cuts and tax cuts, we will see certainly a great time going forward. Plus the kind of monsoon which is coming. So it's going to be a combination of both urban spend as well as the rural opportunity. And consumption is a space which has, underperformed the market also for quite some time. It has been the government pack which has done well. So I think in this somewhat we will see consumption really taking the lead. And there are good quality companies also which are there. So let's say LG Electronics, for example, is one such big opportunity which is going to be a play for both Indian consumer as well as global manufacturing base. So I think companies like this need to be really watched out for by the investors. So that is one side. Auto remains one of the various, famous and very favorite pick. Would I would say that. So companies there would be companies like an SJS Electronics as well as you can have something like a Gabriel. So the pack of auto is one which I think will do very well. Money in the hands of people is going to get reflected in the auto numbers in this month and going forward. So those are the selective opportunities which I think would do well in the coming year. Yeah.
Okay, so, talking about consumption, and we have with us Amisha, Deven, Sunil, everyone's been talking about consumption. We're just listening to Punita also just a few moments ago. Let me just break this up in terms of where you're all seeing value. So, Amisha, let me come to you, whether it's, realty, whether it's auto, gold financiers, whether it's, electronics that are running up post the LG IPO, as Sunil also just mentioned. The gamut is quite large when it comes to some of these consumption-driven plays. Where are you seeing value in the market?
So this entire consumption-led growth will also reflect in higher credit growth, be it in banks, be it in select NBFCs, which are in the relevant pockets. So one way to play that, because you said where is the value?
Yeah.
So we feel that, the banks, both select PSU, private, and select NBFCs have seen in last 1.5 year, because of little tepid growth, valuations also coming off. And now if you see 2 year forward, the valuations compared to their growth and ROE are at a very interesting point. So we think from both growth and valuation perspective as a combination, this segment can give very good portfolio returns and can generate alpha. Once you want to go down further into consumption itself, from there are different facets of consumer, as you very rightly said, from auto, which also we think will do very well, and particularly we are more bullish on four-wheelers. I mean, passenger vehicles than the commercial to start with. And when it comes to FMCG, the fast-moving consumer goods, which is typically not so lowly valued. But if you see in a category as basic as biscuit, the GST cut is from 18 to 5%.
Yeah.
And the raw material trend, be it for wheat, milk, palm oil, etc., is also soft. So we think that if this kind of a giant can, in our understanding, give 20% plus bottom line growth, then even something like that can do very well. So we'll have to pick and choose where a combination of growth inflection with valuation is shifting in.
Fair point. Devenji, coming back to you, help us and our viewers understand those who are sitting with a lot of fund, wanting to maybe create a new portfolio for them or themselves, or maybe to rejig their portfolios. They have two kinds of funds, one as SIPs and the other as lump sum. Where should this money go, especially because a lot of these investors are facing two things. One, a FOMO of having missed out on several opportunities, especially in the commodities and precious metals, to a recency bias again, where they have actually seen the outperformance to come in. So they'll be facing both of this. How should they be tackling this in the new Samvat? Where should the money go, sir?
So, Sakshi, basically, I think the point, if I have to break it up into two parts, I think the one class of investors are basically wanting to go for they chase return, I think in a shorter duration. So they basically want to play the momentum. And then the people like us, I think, who basically want to buy the deep values, because we believe that I think over next 5 to 10 years, what is going to create the wealth? is something which we would like to buy and stay tied with that investment. Now, if you are an investor who is basically looking at deep value, then you are likely to see in next 10 years the likes of Microsoft, likes of Google, likes of Apple in India creating the wealth for investors in next 10 years. And that's where probably I think your systematic money has to get invested into these stocks. Even when they don't perform or underperform, I think your systematic allocation into this stock is the key to create that kind of a value growth in your portfolio. However, those who want to trade, for them the momentum is returning back fortunately now. I think in 2025 the momentum probably broke and I think affected a lot of momentum traders also. It is coming back, I believe, I think in 2026. So should that be the situation, then a part of the traders would always play the momentum. We believe that I think this is a huge opportunity for somebody who has basically missed out this market to create wealth in next 10 years. Just one example, I think, to put that point across. In 2016, a geo platform value in the books of Reliance was probably close to nothing. At that time, they started their operation. Today, geo platform in less than 10 years, I think from they started, has created a value of somewhere around 9 to 10 lakh crores in the books of Reliance. So those who remain invested with Reliance, this value has come to them. Now we are not going to count what return you have generated in last 10 years in this particular stock. You are going to basically gift away this particular stock to somebody and say, look, this is a value that I'm gifting to you. So that's where probably I think the difference is. I believe that I think huge opportunity next 10 years for making such kind of wealth in the portfolio.
All right, Deven, thanks so much for joining us. And let's actually take a look, just pause and take a look at what the action's looking like this Muhurat session, Sakshi, on the charts. Is it still pretty much all green?
Absolutely. All the sectors are up and about. You know, the small caps are in fact among the major indices outperforming at this point in time. You can actually see a 0.7% of an uptick on that one. Same way, the Nifty is still hovering around 25,900 odd mark. All the sectors are up into the green. Pharma, metals, IT, auto, all of them are shining bright. I think barring real estate, which is just seeing slight dip at this point in time, the top movers on the Nifty include names like Cipla from the Pharma pack, Infosys from the IT pack. You also have Tata Motors, Mahindra and Mahindra. Remember, our guests were talking about four-wheelers, passenger vehicles. Amisha just mentioned, and those kind of names are actually, doing well at this point. Axis Bank also among the movers, but on the downside, you have Bharti Airtel, ICICI Bank, Asian Paints, Indigo, Kotak Mahindra Bank as among those that are seeing some dips at least at this point in time. But there are several other sectors also that are moving pretty sharply, and you can see railways and defense also in the move. Remember, this has been one theme that a lot of our retail investors have been focused on in the year 2024. This year largely it panned out as a consolidative year for defense and railways. So let's pick up on that and I'll come to you, Sunil, on that front. Do you think railways and defense coming back into flavor in the new Samvat?
Yes, very much. I think the way in which geopolitical situations are working currently in terms of the global conflicts, there does not seem to be signs of those abating in the near term. So this is something which is going to continue from the previous Samvat to the next Samvat in terms of the crisis in the global markets. And given all that, each country is now trying to be independent on their own. So whether it is European Union or it is countries like India, everybody is increasing their defense expenditure, defense allocation. So now we'll be seeing good opportunity in the defense space, but the pocket would be more in terms of the private sector companies. So earlier in the last 4 5 years, we have seen money spent in the defense sector happen for the PSUs. Now those PSUs are already sitting on huge order book, and given that everything needs to be indigenized, even a lot of contracts are now flowing from this defense PSUs to the private sector. So you have small cap companies in the private sector defense pocket, which would be the emerging winners in this entire pack of the defense side. So because in defense PSUs we have seen a run up of 8 to 10x. I think the next such run up could be possible in the private sector defense companies. That is one such thing. Railways has already played out, and there is this Kavach opportunity which is opening up. Now the Kavach opportunity of four is going to be percolating down to companies. So there are 3 4 companies which are there. All of those would be seeing huge order flowing into them in this coming year. The other emerging, which I think, apart from defense and railways, is going to be the shipbuilding opportunity. Government has now clearly chalked out or earmarked 70,000 crores for shipbuilding in this country. And so in this summer, we'll see that pocket will work out exactly like what defense was maybe 4 years ago. So I think these are the things which will work out in this year. Private sector defense companies and the shipbuilding companies would be the silent emerging winners in this summer.
All right, let's talk about earnings, Sunil. And given what we've seen so far, are you confident of the earnings pickup that everyone's been wanting to see? IT, for instance, of course, the first lot has come through, setting the tone. But we've seen a lot of other earnings in the broader markets that have positively surprised. We're also, of course, going to wait for the GST cut impact to reflect in earnings further in the next quarter. What's your outlook on that front, and anything particular you're eyeing from that lens?
Yeah, so when we talk about earnings, we need to understand the life cycle of the businesses. So if we pick up Nifty right now, which constitutes about 50 stocks, out of those, maybe about 35 of them are in the mature life cycle. What I mean by mature life cycle is that their earnings or their sales have grown by less than 10% for over the last 5 years. So those pockets would include the IT pack, the FMCG pack, you can name it, even few of the oil and gas companies, few of the banking companies. Their growth has been less than 10%, which is lesser than the nominal GDP growth rate. Now, if in the Nifty you have 35 out of 50 companies which are growing at lesser than the nominal GDP growth rate, and the money which is lying, the free float which is lying in those set of companies is humongous. Now, if you compare that with the other opportunities of the auto ancillaries or of the electronic manufacturing, or if you move to the defense or the shipbuilding, those companies are going to grow at upwards of 20 to 25% over the next 3 to 4 years. So we will see a shift of money flowing from those mature set of companies who are having almost about 13 lakh crores of market cap just for the IT sector. So we'll see that money shift to this pocket. And this earnings trajectory, just not about the second quarter. What I'm talking about is a structural way in which it will be positioned even for FY26 or 27. So that is where I think the money flow will happen and we will see
So,
opportunities
Sunil, you
come in
just
that pocket.
briefly mentioned the